So, why are we not going to see a housing market crash? Well, because things aren't that bad and inflation is real. Good morning. My name is Adam Kahn, and I'm the Rational Investor. Today is Sunday, October 15th. I hope you're all doing well and enjoying your weekend. We're going to delve into the housing market a bit, which is my favorite topic, if not my second. My other is just stock market and investing in general. But before I get into it too much, do me a favor, hit that like button, do a subscribe, make some comments if you like, and tell me why I'm right or what I'm wrong, what's going on in your lives. Are you looking to buy a house? Are you looking to buy stocks? Where do you see good investments? I'm also going to put a link in the description, if not two, for opening an account at SoFi. Hopefully that plane isn't too loud. Um, if you use that link, you'll actually, for if you open an account with $10 or more, they'll give you another $25. It also gives a gift to our account, which is my son's, who's 12 years old, so he gets super excited about that, and I really appreciate the support. Along with the likes and subscribe, which is even more important to me. I'm a lot less concerned than the SoFi account because that helps YouTube's algorithm. It gets the information out. So if you like the stuff I talk about, it helps other people find it as well, the more involved you guys get. So stick around. We'll talk about housing and hopefully you find it interesting. I'm well aware interest rates have gone up from sub 3% to over 8% in the past few years. And I'm also well aware that the prices of homes have gone up significantly as well. But part of the reason I go on and on about house prices not being too expensive or it's going to keep going is there's too many people out there giving misinformation and making people excited about waiting it out for a big crash that may never come. The problem with that is they constantly keep people renters for life as opposed to investing and buying a house and building equity and doing things that are better for them and their family. Now, do your own research. Don't listen to me. Find out what the best things to do for you and your family are on your own. And don't listen to any of us on YouTube. But I'm going to talk about this one guy a little bit, Orlando Miner, who when I did the when I did the research, I went back and he started touting the housing market crash in January of 2021, right when interest rates were at the dead low, and the house prices are up something like 40% from there. So, those of you who've been listening to him and staying out of the market, ha 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 ha, as he does, my God, what an opportunity you've missed. And while people are commenting and encouraging him, I'm noticing that now he's selling how to build a YouTube channel. So I'm not even 100% sure he believes the stuff he's selling, or if it's simply the thing that's getting views at this point, so he keeps going with it. All markets are driven by supply and demand. That's economics 101. And right now, while the demand is waning, supply has dropped dramatically. And not just that, I don't see what's going to increase it because as the Fed raises rates, builders are less incentivized to build properties because it costs them more. You also have people who own homes at lower rates that become less incentivized to list them because they have such a good deal on the home they already own. I think the Fed has really painted themselves into a tough corner where the higher they raise interest rates, the less likely we're going to see some inventory come to the market. And it probably doesn't cause the crash they're helping. Well, wanting, not helping. And then the loans today are completely different than they were back in 2008 when we had the housing collapse. They had this option arm program that was getting abused. They don't even allow for the program anymore. It was an investor loan. It kept your payments low while you could fix or flip a house. And if you got more debt on the home, it really wasn't that big deal because the concept was you'll have sold the home in that amount of time. It started getting sold to the general public, and it gives these four options of payments you can make. Well, most people pick the lowest payment on that program. The trouble is, after a seasoning time, they would become a fully amortized loan. They weren't just like that forever. So people saw their payments quadruple. And in the meantime, some of them had even accrued more debt on the home than they originally started with. So once the housing market took the beginning hiccup and dropped a little bit, what people found themselves is they were upside down in terms of how much the house was worth versus how much they owed on the property, and their payments just quadrupled. So as you saw prices start to go lower and lower, they got into a worse and worse situation, and there was just no reason for them to keep the houses. So they dumped them on the banks. What we've learned from there is the banks don't really want to own that much inventory, which was the whole reason for all of the forbearance and things like that during COVID. The banks really don't want your property, despite what all gloom and doomers seem to think. And I think that's what we're going to see in the commercial space as well. I do see the issue that the commercial lenders won't be able to they won't be able to lend on the properties now that interest rates are higher based on the rent rolls. So what I really predict is they're just going to go out of contract. They're going to let the commercial investor continue to make payments that they were at the lower interest rates and just wait it out and hope that they end up okay. There's no way that the banks are going to want the trillions and trillions of dollars worth of commercial real estate. Actually, a friend of mine is in that exact scenario. He got into healthcare. He was really fortunate and had a bunch of properties. He sold most of them, but still has three left. Well, their mortgage is coming up. The bank is calling him in saying, "Well, what should we do? We'd like to update this program." And he's looking at them kind of scratching his head because the properties are rented out at 80%. So he's like, okay, well, do a new loan. That's fine with me. Well, the amount he's getting in rent doesn't qualify him for the loan programs at the new interest rates. So the bank is saying, well, we can't give you a new loan. The property doesn't qualify. And his response is, okay, well, you can have the building. And the bank says, no, 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 we don't want the building. And he's like, well, okay, then give me a new mortgage. And they won't give him a new mortgage either. He can afford to float it. He doesn't really care either way, but he thinks the answers are almost funny because he's like, up to you, whatever you want to do. So what are they doing? They're staying in limbo. He's continuing to make the old payment at the 3 or 4% rate where it was before, and the bank's accepting that because, like I said, they don't really want those properties. So they're just leaving things the way they are because they don't have a good answer. Well, I think that's going to be built into everything, and the bigger companies are going to be in the same boat. And the bigger companies really can dictate the rules because banks aren't going to want trillions and trillions of dollars in commercial real estate. So I don't see this big collapse coming that the news is talking about. I really don't. What I picture is people continuing to complain that everything's gotten too expensive and they can't afford anything. But hockey games and basketball games and concerts still seem to be sold out. People are buying cars at payments of over $1,000 a month, and they're all whining that it's all too expensive. But somehow, some way, they're managing to do it. And in the same breath, they're all saying, "Oh, there's going to be this huge unemployment, the economy is going to crash," and. Well, I don't see it. I think this is what's called life, and people just can't have everything, so they have to decide which are the important things. Do I go to less hockey games? Do I go to less this? And a lot of them just complain and deal with it. The credit card debt being at all time highs. Well, of course they're at all time highs. Things have gotten more expensive. So if you charge things on credit cards, the bills are going to be higher. That's just the way it is. That doesn't mean there's this big collapse or gloom and doom coming. That just means it's the economy we're in. And my real suggestion, is get used to it. And if you want to buy a house, save for down payment and buy something you can afford. So if there is a bump in the road, it isn't the end of the world. I'll say it again, don't listen to me. You need to make your own financial decisions. I don't need any problems that I told you to go buy a home and the market corrected, because markets go up, markets go down. You just have to be prepared for that. So have a great Sunday. I'll remind you again, thumbs up, like, subscribe. Tell me why I'm a moron. I'm all good with it. And I hope you enjoy your weekend.